is the component unit itself, or the reporting unit entity itself. So when you open up the statement of net position, okay, actually, let's see if we can look at one of them. Here we go. Sorry, what I'm going to do is just go back to this for a minute. Okay. One of the first things people look at when they open the notes to the financial statement is this concept of financial reporting entity. And it's interesting, when you read this, this is exactly what's in your textbook. So let's define this. You open up the state of New Jersey's CAFR. What's the first question you want to understand? What does that CAFR represent the activity for? We know it's state of New Jersey, but is it state of New Jersey plus all authorities, plus all municipalities, plus all counties? What does it represent? So for readers of financial statements, it's very important for them to know, what do the financial statements represent the activity of? Okay? And in this case, what I want to tell you is it represents the activity of the state, and it represents the activities of the following colleges and universities. Notice they are all state institutions. These are the authorities of the state that are represented within the New Jersey CAFR. So what did we see? State of New Jersey, and what else? Educational institutions and authorities, right? Any towns? No. Any counties? No. Most of us, are people who are not familiar with this subject, assume that the state of New Jersey's financial report contains all its municipalities. No. Okay? And this is where we come back to the discussion of the reporting entity itself. Okay? And let me give you the definition of what the reporting entity itself is. It consists of the primary government, in which case, what is it? State of New Jersey, and all component units for which the primary government is financially accountable for. What are those? Those are the component units. They're reported by discrete, separate column presentation, and I'll talk about blending for a moment. Okay? So let's go back to the definition of primary government. A primary government can be a state, can be a county, can be a municipality or a city, or can be a special purpose government. 4 different things a primary government can be. Why did I tell you this? Because if you are a primary government, you cannot be a component unit of something else, a special purpose government. Okay? Again, it's a little confusing. But a primary government could be the state, could be the counties, could be cities, could be special purpose governments. And what we learn is that primary governments issue their own CAFR. So a city would do what? Issue its own CAFR. A county might issue its own CAFR. Please don't take this for New Jersey. New Jersey is the odd state out, okay? All right? So these are your primary governments. What are component units? They are authorities of the state and others. Let's see if we... Okay, let's go back to the primary government for a moment, and then I'll come back, because I want you to really get this definition. The question is, if the state of New Jersey issues a financial report, what should it contain? It should contain the state of New Jersey and anyone who satisfies this criteria, which is if another organization, for instance, I worked at the Meadowlands, the state had the authority to appoint the board. When you can appoint the board of an entity, do you have control over the board? Can you impose your will on that? Yes. Does the state have the ability to appoint the council at city or county level? No, because they're done what? They're appointed by the constituents within the citizens within that. Yeah.
Well, if the municipality goes bankrupt, then
Well, then it's a different thing where the state takes over. Okay, and in our case, New Jersey, as I'll come back to you, we deal with it a little different, but it happened in the city of Camden, where they were in such trouble, and the state kept on telling them, you need to do this, this, that. Mayor said, I don't care, I'm not going to do it. They said, no, you have to do it. They said, I don't care. Let the city go bankrupt. I don't care. This is my city, and you're not going to interfere with the way I run the city. So guess what the state did? They went into court, and they literally took over the city. They threw the mayor out. They became the boss. And that was the end for the city of Camden. Okay? So in some cases, that does happen, where the state has the power to financially take it over, but also in other ways take control over that. So again, these are the tests. If you can appoint the board, obviously, right? Or you can impose your will through that. And the second is that where you can potentially provide specific financial benefits or impose a financial burden on the other organization. What does this mean? So you can appoint the board. For instance, if you have an entity, just think about this. If you have an entity, if it goes under, something bad happens to it. If the state has to come and take that over, or they have responsibility, their financial statement has to be included in the state. So for instance, see all those Rutgers and everybody else, the authorities listed? It basically says if something happens, does state have responsibility? Eventually, yes. Now, Rutgers is kind of interesting because, the state doesn't appoint the board for Rutgers. The state has a state representative, but the Board of Regents are not appointed by the state. There are two different boards, so it's a little different. But these are the conditions that tell you whether to include an entity within a primary government. You can appoint the board, or there is some financial benefit or burden that accrues from that relationship. If you meet those two tests, whatever that entity is, you must include that in the primary government's CAFR. And look at this. Even if it does not appoint a majority, if the primary government is financially accountable for another organization, if the other organization is fiscally dependent, the other organization can provide specific benefits or impose. Remember the case of Rutgers? Even though you might not appoint the board, but if it meets those two tests, you have to include their financial statements as part of the CAFR. You want to see if they in fact do that? Let's go back. There we go. There's the component units within the state of New Jersey CAFR. Rutgers State University is included as a component unit of the state of New Jersey, and therefore included within the state of New Jersey's financial report. Let's look at Rutgers. I always like to see net assets. How do they look? How does Rutgers look? That's the last column on the right. Do they look okay? All right. I won't say anything more. Okay. All right. Who else is included? UMDNJ, and other non-major component units, and they all come out to that. Do you see that? So what do you do? Again, those tests, right? Some financial burden or financial interest, and what? Ability to have control, right? And even if you don't have control, if that meets the test. All right. I know this is kind of a dry topic, but it is, you do need to understand this to be able to know what should be included. Because if you are the accountant for an entity, the question will always come to you, all right, I work for this town, the library. Should I include that in my CAFR? All right, library board. Who appoints the library board? The mayor does that, so we have control. Who gives the funding? Who provides? We do. You know what? They should be included. So it's very important to know that so you know what to include in the CAFR. Okay. And this is the definition of financial benefit or financial burden. If you're entitled to the organizational resources, bless you, is legally obligated to finance the organization's deficit or is legally obligated in some manner for the organization's debt. And remember, this is even if the board was independently appointed.